Good morning, everybody. It's Michael Martin. Hope you're doing well. Today on the show, I got Jason Shapiro. Pretty excited. Been a fan of his for a long time. Of course, you read about him in Unknown Market Wizards, which is funny because I've known about him, my whole life. But we're in the same peer group. I was on Jason's show back in March, so today I'm turning the tables. This is a conversation between two guys of similar age and experience. In many ways, we've had parallel lives, so it's not so much an interview. I think you're going to like it. In the description, you'll see links to Jason's site, Credit Market Report, where he has some great research, and also a link to his YouTube channel if you don't already have it. I appreciate you being here. Enjoy the chat. Jason, how's it going? It's so good to have you on the show. I was very grateful for being on your show back in March, and I've been waiting very patiently to reciprocate and have you back on. How you been, man?
I'm good, Michael. How are you?
I'm good too. I'm enjoying the summer. It's about 1,000 degrees out here, and there's no escaping the heat. I want to, congratulations on your site. It's really great. I'm learning a lot. I appreciate the videos that you put on. Um, you know, one thing that we have in common is that we're contrarian thinkers, and in Market Wizards, the unknown one. This is it right here, folks. If you haven't read Jason's chapter here in Unknown Market Wizards, it's a must read. We've had very parallel lives. Your wife calls you a pathological contrarian. How did that come about as like a personality trait?
I don't know. I don't know. It just for whatever reason I was born with a bad attitude. Um, it was something that was in me from the time I was very young, and kind of continues to be there. I guess. I don't know what it was. If my mom dropped me or what it was, but something happened clearly.
Yeah, I mean, our environments, you mentioned our parents, our environments, I think, do a lot to shape us, whether we know it or not. The who people we're with, where we are, and all this and that. It seems as if that's, from what I've read too, and then speaking with you, you, you have strong opinions, but as traders, we also know that we have to manage risk. Would you call yourself a person who, as a man of strong opinions, albeit loosely held?
I like to believe so. You know. Um, yeah. I mean, I have tried to make my trading in particular into more process driven thing to keep my opinions out of it.
Yeah.
Other than my opinion of when everybody's short, then market can't go down on bad news anymore. I'm looking to go long, and opposite for things I'm looking to go short. Other than that opinion, I try to keep them out of it, out of my trading because markets have a funny way of screwing you when you trade your opinion very much.
When Jack interviewed you for, the book, and even on your channel, I've seen the video where you talk about how, the market was going up, yet you were of a strong mind that it was going to go down, and you kept shorting into a rising market. Did that have a big impact on you to perhaps start trading more systematically?
100%. Yeah. Yeah.
So I remember reading I don't know if it was in the book or not, but I heard Paul Tudor Jones say, price moves first, fundamentals follow. What do you think about that?
Yeah, I think it's 100% true. I trade market turns, and clearly, where you're going to find a market turn, things look worse fundamentally at the bottom, and things look best fundamentally at the top. Now the fundamentals might look good as the market's going up, so it's tough to pick. Where is that top? But one thing I know is that at the top things look best. Why would everybody be long, and why would the markets be going up if fundamentals weren't good? You know,
Yeah.
and same thing on the way down. Um, so the market turns first, and then suddenly, amazingly, the fundamentals start to turn.
Yeah, there is a bit of a chicken and an egg kind of a deal here. I wanted to ask you about that. Also in Market Wizards, Jack talked about, you know, trying to catch the bottom. I think it was in the bond market. And, the headline would say, professional trader, who's doubled his account a bunch of times, nails, catches the bottom of bonds by like 2 ticks. And he was like, the reality of it is, I had to try like 4 or 5 times, like after 5 or 6 times, I eventually caught it. Like, so people don't really see the making of the sausage.
Right.
The way I know COT comes out every week. Do you think, or can you intuit at this point, because you're an expert at it, and have a sense that the market's going to turn, like based on price action, because you only get the COT once a week, as I think, what is it, Friday afternoon or something like that. So,
Yeah.
so, so how does that? I'm just interested, like in your instincts, because you've been around a long time, you've been trading a long time. There's certain things that we can kind of intuit, even if we don't take action. Like, hey, I've seen this before, and I'm not suggesting that you jump the gun, but are there ever any of those instances ever where you see like the price turn and you're like, I wonder, I have a good sense that the COT is going to turn and I'll end up getting a signal?
Yeah, I mean, the COT coming out once a week is not really an issue for me. I'm not day trading,
Right.
I'm turn picking. Turns don't happen every day, you know.
Yeah.
So the COT will be set up. I don't really need to front run it necessarily. Once it's set up as very crowded, then I'm looking to pick the turn. I need the market to confirm that for me first. I'm not just going to pick the turn because of COT being crowded. That I have found will run you over time. That's one piece of the puzzle, but it's not the whole puzzle. So once the COT shows that the positioning is very crowded, then I'm looking for a market confirmation before I will actually put the trade on. And even when that happens, are there times when that wasn't the turn? Yes, I get stopped out and I take my loss. Sometimes it takes me a few times, and sometimes it happens on the first try. Those are obviously the more fun ones. But without a doubt, there are times where I will try to, the market, I think that the market is saying, here's the turn, and I'll put it on, and it's not the turn. And so I get stopped out.
Yeah. I think for the folks watching too, I get a lot of emails, you might too, that, they, they want perfection. They want accuracy. And I try to stress that, look, if you can do as well as Jason's done, you're going to have a great career, and people are going to actually seek you out to run the money, right? So think in terms of expected values. Like, it's okay to be wrong. It's not okay to stay wrong, right? I mean, we've learned those painful lessons ourselves. Do you ever think to, I want to talk about staying power, because we can position size based on what we're kind of currently seeing in the market, based on volatility. There be say an inverse relationship between volatility and position size. Do you ever consider using options? Like if you see the market turning and it's going to go up, we ever consider using calls?
I'm not an options guy.
Yeah,
It's never served me well
I
as a
understand.
as a directional trader. There's a lot of times where I think that options to me is more about trading, the implied volatility than it is trading direction. So as a directional trader, if I catch a bottom and the market goes up, I need to make money, right? I can't buy a call, have the market go up, and then have the volatility go down, and I don't make money because of that, right?
Yeah,
So, and I know that there's other options trades that you can do that with, but I just prefer to trade the futures and get the straight direction and take my loss and make my gain that way.
yeah. So do you ever find yourself getting aggravated in those situations where you might, take your signal, you get in, and then you get knocked out, even though the other parameters have lined up and you followed your rules to a T?
I mean, the whole thing is aggravating, as I'm sure you know. But no, that situation doesn't aggravate me. I am well aware. I've been trading the same process for over 25 years. I know my statistics. My winning trades are just less than 40% over time on my trades work. So, which means that just over 60% of my trades don't work. So, what would aggravate me is to not stop out of the losing trade and then have it go against me big time, and me losing a lot more than I should have on that. That would aggravate me, and that I don't do. I take my stops. And then, of course, you get stopped, and the market turns around and goes your way anyway, and that can be aggravating too. But that's just part of the game.
Yeah.
Like I say, it's all aggravating, but to me, the game is getting into situations of positive return to risk over time, right? If you can get into these situations where you're going to get paid $4 or $5 and have the possibility of losing $1, and you can do that again and again and again, then over time, it should work out. So, unfortunately, the losing of the one is part of it.
Yeah, I mean, this is the key to it, right? Is for me, I came out of a good school, and I was used to living in the accuracy world, right? I got the gold star. My parents hang the report card on the refrigerator, so that's all very validating and it's very powerful. So going into a world where you're trying to live in expected values, it took me a while to learn how to get comfortable knowing that, yeah, if you put on 1,000 trades, my accuracy isn't quite at your level. It's more like 30%. So learning to live with the other 70 was was quite an exercise. It took me a couple years to get used to that. Felt it was very, very uncomfortable. But learning about the asymmetry is really what, like, where the aha moment was. It's like, oh, okay, right. I don't have to be accurate if there's asymmetry in the terms of the payoff. Are you looking for, or do you know, and you don't have to tell me the number because I don't want to kind of encroach on stuff, but is there a certain type of asymmetry where it all makes sense for you, or beyond which point it doesn't make sense to even put on the trade?
Yeah. I mean, like I say, my winning trades tend to have a 4 or 5 times profit over what I was risking. So that's kind of what I'm looking for. I don't look at it going into the trade going, oh, well, here's the area where it would be 4 or 5 times. It's just over time, that's what it has proved to be. Sometimes my trades don't get up that much before I get out. I'm not saying, okay, I'm going to get out when it's 4 times what I risked.
Right.
That's not what my process is about. I'm getting in when people are super short. I'm getting out when they're not super short anymore. So sometimes that's a big move. Sometimes I get paid out 7, 8, 9, 10 times to what I was risking. Sometimes I'll get paid out 1 time to what I was risking, and sometimes I'll lose. But I just take what the market gives me based on my process, and over time that's been about 4.5 times what I risk per trade. So that's all I can really go by.
Yeah. So I think it's an important takeaway too for the folks at home that sometimes these things are going to take some time to play out. You might not see 5 to 1. Now look, if you're a scalper and you're trading 10 cents risk to make 50 cents, I suppose that's one way to do it. So Jason, do you find, like, when you're monitoring, I know COT is part of it, that when you tend to offset your winners, is it a more hybrid approach in terms of, like, I'm monitoring the COT to see when it stalls, so to speak, or is it more price based, when you're looking to offset your winners?
No, it's all position based. If my theory is people are way too short, so I'm getting long,
Yeah.
then again, when it measures as people are not way too short anymore, well, then as far as I'm concerned, my edge is gone. So I take it right there. So it's more of a positioning based thing than a price based thing. It's not like, oh, I've reached a level or anything like that. It's people were mega short. I got long. It's working. They're getting out of their shorts, which is what's driving the market higher in my favor.
Yeah.
And now they're out. So I'm out. My edge is gone. So I'm out.
Very interesting. Very, very interesting. I'll come back, folks. there'll be links to all of Jason's work in the description, so you can find Crowded Market Report. You can see his awesome YouTube channel as well. There'll be links in the description. Um, let's take a step back and think about, again, you had a lot of experiences. We've had almost parallel lives and dealing with people and having our own CTAs and then working for other people and this and that. Have you found that? I know that you used Jack changed the names of the actual people to kind of protect the innocent and not necessarily out them in the book. But did you find that those people from like the first Asian woman who gave you like 100K, I think you ran the account up like eightfold or something. It was a big number.
Mhm.
And then she took her money out and you did a very good job with that. It's a very inspiring story. Do you find that the people that you end up doing business with in those situations kind of helped shape you as well, like in terms of your trading? Like, did you find yourself acting like a chameleon to fit the situation? Or were you more like, hey, this is me, I'm Jason Shapiro, and this is the way I create the alpha, good, better, and different?
Yeah, I mean, it's kind of changed over time. Like the story that you talk about was when I was very young. Um, and I wasn't trading the way that I trade now. I just happened to be caught up in a massive, which is always good for a young trader, at least short term. I was caught up in a massive bull market and I was young,
Mm.
didn't have any fear, so we were just buying the crap out of a lot of stuff and it was going up. That was all that was. And of course, as time went on, I learned that that is not going to work over time. It worked for that time, and that was wonderful, but that was all given back, by the time it was all over. Um, Jackie, being the person who did back me with that, of course, was experienced enough and smart enough to have taken her money out before I gave it all back because she knew, what this looks like, right? She'd been trading for a few decades, so she knew. Um, but yeah, no, now it's more like I've developed this process. People that allocate money to me understand what the process is meant to do and what the return stream is meant to do. It's clearly, if I am getting long things that I measure everybody is super short and I'm getting short things that everybody's super long, I'm going to have negative correlation, obviously, to most other strategies. So if I can provide positive return with negative correlation to my clients, then clearly that helps their portfolio overall. And that's what my job is. I see myself as one player on their team,
Yeah.
which is why, I'll buy something because they're super short. I'll get out when they're no longer super short. That's my job. And does that mean the market can't continue to go up? No. But that's sort of at that point, the fact that people got out of the shorts and are now getting long, that's the trend followers getting long. That's the trend followers' job, right? Or the momentum people's job. And my clients will typically have that in their portfolio. So that's their job. My job is to catch that turn.
Yeah.
And so that's what I do. So I'm fortunate now where I am in life that I have clients that have been with me for a long time and that understand that and that that's what they expect from me. So I have in the past had clients that didn't necessarily understand that. We're just looking at my top line sort of returns and saying, oh, he's got good returns, I'm giving him money. And that was a lesson that I learned. Those were not very good clients for me because then as soon as I had 2 or 3 down months, they'd be freaking out and, not understanding, right? I'd be like, well, trend following is up, whatever, 15% in 3 months. I'm down 2%, like that's part of what I try to do, I
Yeah.
don't try to do it, but that's part of what's going to happen. If trend following is going to go through a huge run, I'm probably going to lose a little bit of money. But if I can lose a little bit of money while they're killing it and make a lot of money when they're losing, then together, it works out. So I don't have clients anymore that don't understand that concept because when I did, I started a CTA and I had a bunch of people working for me and I had this dream that I was going to be, the next big, multi-billion-dollar CTA type of thing. So I had to have a lot of people and a lot of infrastructure. And so to cover those costs, I needed to accept whatever clients I could get, and that turned out to be kind of bad. Now I'm a one-man operation. I don't have very much cost at all. I work out of my house. So therefore I can accept clients, so to speak, that do understand what I'm doing and do understand how it can fit into their portfolio. And that's been a very good thing for me because I don't have, have a losing month. I don't have people pulling me up, telling me I suck and, getting in my head. People don't understand. Getting inside somebody's head is not a very good thing as a trader, right?
Mm,
Because that's when you start making bad decisions, right?
yeah.
And getting off your process and all that. So I'm lucky now that I have arranged it to where I have very good clients who are aligned with what I'm doing and understand what I'm doing and are allocating me money specifically for the purpose of what I'm doing.
Yeah, I mean that's well, for the newer folks listening, like this is a huge asset, right? So that's not just, commodities can have negative correlation to other paper assets like stocks and bonds, but when you as a CTA can be negatively correlated to the other horses in the stable, that makes you even more valuable and as far as I can see, because like you said, you're going to be, not correlated to say the trend followers. You could find yourself literally in the right place at the right time on a few different levels, right? They kind of know what they're getting with you. And that's an important takeaway for the newer folks is that you don't necessarily have to blend in with everybody else because to me, the trader is the asset, right? We end up trading our personalities in many ways, it comes through in our actions. So I like that a lot. Were there any other people, you've had a lot of experiences. You've lived in several countries. I was very touched by the story of, you're living in Burma with the monks and the alms bowls and all this and that. Like, were there other takeaways from like the time that you spent in Malaysia or London or China or India that that didn't make the book that really had, have stayed with you over the years that helped, shape you as a person?
Um, I think people are people is what you learn as you travel around the world and spend time with people, you know? Um, that's, I think, the main lesson, People are people. There's different nationalities, there's different religions, there's different political beliefs. But for most people that I have met and come across, at the end of the day, people are just looking to take care of their families as best they can. Um, and they're not filled with as much hate as we are told that they are filled with. Um, and people are susceptible to the same groupthink as everybody else is. And that's kind of what I trade against is groupthink. I think we have found on a very general level throughout history that groupthink ends badly. Let's say it that way, right? So maybe that means fading groupthink ends well. And that's kind of what my trading is. I'm fading groupthink, right? And it's just like anything else. Momentum for a while and groupthink can work. But at the end of the day, it ends badly. So I'm trying to time that when to fade that groupthink. And the good thing is the market kind of tells me when, not me. I'm not saying, oh, this thing's overbought. Oh, the RSI is at 80. Oh, this or that, the other thing. The market is sort of giving me the confirmation in itself as to when to fade that groupthink. But yeah, in general, that's what I have found traveling the world. I mean, I was just on a 2-week sort of road trip that I just got back from last night, and I met a guy who was from Kuwait. Very nice guy, and I was hanging out with him for a while. And I was born into a Jewish family, and he didn't know that. But he was giving me, I just said, hey, how's everything in Kuwait? He said, oh, it's better than it was a few months ago. And I was like, what happened a few months ago? He goes, well, Israel, attacked Iran. And I was like, oh yeah, sorry. And I'm not like a big Israeli backer or anything like that. You know what I mean? I was born into a Jewish family. I'm not a religious guy now. But it was interesting to hear his take on the whole thing, and I could understand from where he's sitting and where he's from and all that, why his take would be what it was. But despite that fact, he was a super nice guy and we had a really nice time together. We may not agree necessarily on politics, but so what? He was still a good guy. I think it's important to understand that, people always take it like, oh, I think this. I know a lot of people that are like this. I'm on both sides, of the spectrum that we're in right now. I think this, and therefore all the people that think something else are stupid. I hear people say it all the time. These people are morons, right? Well, maybe they're not morons. Maybe they have a different experience in life than you do, and therefore their outlook is different than yours is. That doesn't make them a moron, right? It just makes them different, and we should, I believe, accept that as best as we can. Why would you want everybody to be the same? That would be boring, wouldn't it? If everybody was exactly the same and thought exactly the same, we'd just be a bunch of robots. And people talk about, diversity. They want to embrace diversity. They just don't want to embrace diversity of thought, which is the most important thing about diversity, if you ask me, right?
Yeah.
Who cares? People are different colors and they're different this and they're different that. Okay, wonderful. But it's the diversity of thought that I think makes the world an interesting place. So why not embrace that rather than hate on it? Is kind of what I get from having traveled the world. And I grew up in a pretty sheltered environment, in the suburbs of New Jersey. I didn't know anything about any of these places. I never even thought that I would go there. It never really crossed my mind. But then once I went, my outlook was changed quite a bit.
Yeah. Yeah, I was, suburbs in New York and then in Manhattan. And I had some very strong opinions and I was very opinionated. And I think I was holding on to that as like a security blanket because I really didn't have any identity. I didn't know who I was as a trader. So I was like, you are what you think about. And I was like, these other people, they think differently from me. I think differently from them. Like you said, they're not bad people. We've all just had different experiences and they're all very legitimate. Some, I can't, you learn, like you said, feelings aren't facts, right? Some of these people are so dyed in the wool one way or another and they've become intolerant. They've stopped listening. And I think like the biggest asset I ever had in my life was my father, who, he's since passed away recently, but learning to listen, right? That's when I try to do like, I kind of slangly say to folks, I do 2% of the talking to generate 98% of the conversation. I might not go to the extent that you do and become the contrarian in the crowd in those moments. But I definitely do a lot of listening and I try to think from an emotional intelligence standpoint, like not just what the person is saying, but why are they saying it? Are they trying to steer me? Are they trying to impress upon me a certain thing? Are they trying to impress me in general? And that gives me like a lot of metadata. And then I kind of take that and think like, okay, all this information, it's not commitment of traders, but one of my favorite books on trading is Extraordinary Popular Delusions and the Madness of Crowds, because, it kind of ties into your style too. Like the chart is created by the market, not the other way around, right? So I try to look and see, okay, how are people thinking? Because if you can catch that type of a turn, where are the most people going to be surprised? How are they going to, where are they going to get hurt? Where are they going to feel certain feelings on the chart? It's a very unique way of looking at it. But are there any other type of person that you met professionally that had a big impact on you and like the way you think about the markets? Like, was there anyone who kind of suggested maybe look at COT or look at the market a certain way and kind of helped shape you? Because and I don't want to keep talking, but when I started trading, I knew I just had to do it. It was like having kids. There's no perfect time to start building a family. You'll never be ready, right? You can go read What to Expect When You're Expecting and you can get Diaper Genie, right? Which is what you're going to need. But other than that, there's really no way to prepare. So I just really started trading because I figured like the doing of the trading was going to teach me more than any book or otherwise. But was there any person that stands out that or trading style that stands out as having a very large impact on you?
Yeah, the first Market Wizards book had a big impact on me. The interviews with Kovner, the interviews with Paul Tudor Jones and those people. Um, it just made, I thought, a lot of logical sense to me, what they were talking about, in terms of whenever Tudor Jones talks about when everybody's on one side of the boat, you want to be the first one to get to the other side, because they're all coming.
Yeah.
That kind of made sense to me in a general sense. A lot of the stuff that Kovner talks about in terms of, let the market tell you. He talked about how he could make the argument either way, that the market was going to break either way. So let it break one way. Let the market tell you which way it's going to break. I think that's a very important concept, letting the market tell you rather than you telling the market. I think that's where people get in trouble. People try to predict the market. And it seems weird, but I think that that's exactly what this is not about doing, is predicting the market. I think this is about getting into situations where risk reward is in your favor. And that's really it. That's all it is. The market's either going to go up or down, but can I lose one, make five, lose one, make five in this situation? That's what this game is about. And I think that that's what most people, it seems to me, don't really realize. They want to be told, or they want to try and figure out, is the market going up or down? Well, I don't know if there's anybody that knows that for certain. you know?
Right.
So you might as well give up that idea, because you're not going to be the one that's going to know that for certain over time, right? Um, and I think that's the mistake that people make the most in this game. It seems like that would be logical. Well, I got to figure out if the market's going to go up or down, if I'm betting on it going either up or down, right? That seems logical, but the truth is, to me, that's not really what it is. So those people really had an effect on that type of thinking for me. I then, the first part of that book was a lot of the guys from Commodities Corporation. And then later in my life, I was led to Helmut Weimer, who started Commodities Corporation. And I had a good relationship with him, and managed some money from him. And we used to talk a lot about this stuff as well. And so it's just logical to me that what moves money what moves markets is either money going in or money going out, right? So if a whole bunch of people are short, it's just like we've seen recently, or in the last few years with these meme stocks, right? People are like way, way short and the market starts squeezing up. Well, then there's a chance that there could be a big move the other way. If people are way, way long and the market starts going down, then there's a good chance that there could be a big move that way, because all these longs have to get out. That makes sense to me. And it has worked for me, fortunately. So yeah, those kind of things had a good effect on me.
Yeah, I
But
appreciate.
like you say, getting in is the most important thing. People used to ask me all the time, how do I learn how to trade? I go, here's what you do. Take every dollar that you have in your life, put it into a trading account, and start trading. And I promise you'll figure it out, because you know what I mean? You don't want to go broke. So, you'll figure it out eventually, if you do it that way. Now, that's a little radical for most people, but in a general sense, it's like what you said. You got to get in there and start trying stuff. And I don't claim that. It's just like we go back to the diversity of thought thing, that my way of trading, A, is the only way of trading, right? Or B is the way of trading for everybody. It's just not.
Right.
Okay. For me, that's great. I try and teach my thought processes and my methods now that I have this web page. But I consistently am telling people on there, like, take things that either make sense to you or you've seen work here, and add that to what it is you are doing, right? But don't just try to do what I do, because you're not me and I'm not you. I can't do what you do. You can't do really what I do over time. I've been doing this a very long time. I know my statistics, so I can sit through losing periods of what I do, for example, a hell of a lot better than you will be able to. You'll give up because you'll be like, oh, Shapiro's full of crap. This sucks. I'm out. And of course, you'll do that right when it turns around and starts to work, right? I mean, that's the nature of the game, right? But you can take some of the things that you see from me and add them to things from other people. I tell these guys all the time, you shouldn't try to be me. You should try to be better than me. You know, I'm limited to doing what I do because this is what I do for my clients and this is what they've hired me to do. You're not. You can learn a little bit from me, a little bit from Michael Martin, a little bit from whoever. You can put all those things together and you can be better than all of us, you know. Um, like I say, I'm negatively correlated to trend following and therefore I add value to people that have that kind of in their portfolio. But does that mean I think trend following is horrible? No, trend following has its place as well. I don't trend follow. That's not how my trading is, but that doesn't mean that it can't work. You know,
Yeah.
I'm not into technical analysis, you know, but so what? If it works for you, then who am I to argue? You know, I tell people all the time, if it works, it's good. You know, I don't use technical analysis, but so what? You do, and you're making money. So therefore, that's what you should be doing. You know, that's how I see it. What if it's working? It's good. I'm not the ultimate judge of, you know, what works, what doesn't work. I'm the ultimate judge of what I'm doing is working. You know, because if it's not, I got to figure out what's going on. But there's plenty of things that can work, and plenty of things that can work for you and not work for me, or work for me and not work for you. You know,
Yeah.
and we could try to do the same exact thing, and it'll work for one person and not work for another person, right? So.
Yeah, I mean, I think that's where personality comes in. There's just certain things that are not going to resonate with me that might resonate with you and vice versa. But I think you made a good point. Like there's someone watching, like the folks watching to me, they very well could be, the future of the business, right? So I want them to succeed. I hope they do better than I do, right? Because otherwise, what's the point, right? We have to push forward. The world needs really good money managers, right? There's people out there like who rely on pensions and 401ks, like they really need good money managers to be the stewards of their futures in many ways.
Yeah, I mean, for me, it's more of I think, quite frankly, a selfish thing, probably, I would call it. What's happened here with Crowded Market Report and all this, in that I'm getting older, I'm getting closer to retiring. So at the end of the day, you get to this weird place as you get older, like, well, so what did I do?
Yeah.
Did I help anybody? You know what I mean? Like, what is life really about, And we know when we're younger, it's about chasing money for the most part, right?
And women.
Well, that's right. Well, one gets first you get the money, then you get the power, then you get the women, right? But as you get older, you start to think in different terms. Did I do anything that was worth anything here? You know what I mean? Like, okay, I made some money. Everybody sold. I bought. I made money. Everybody bought. I sold. I made money. That's wonderful, and that's my job. But maybe there's a little bit more. So when that whole Market Wizards came out and people started to contact me, hey, could you teach me? Could you help me? So we put together this Crowded Market Report, and it's a way that I can at least pass on, whether it's good or bad, pass on what I have learned and what I know, and then people can take it from there, and the legacy can kind of go on, and I can feel like I've helped people. I always say, like, what am I going to teach people to do? I ain't going to teach them how to do jujitsu because I don't know how to do jujitsu. This is what I know. This is what I've spent the vast majority of my time doing since I was 21 years old. Good, bad, a lot of lessons, a lot of failures, some success, So this is what I can do to, I think, at least provide some sort of positive legacy. It's like the whole play it forward, pay it forward type of thing, right? So like I say, I think it's probably it sounds like, oh, I'm trying to be generous and give the world what I know and all that, but it's probably more selfish than anything else, right? I want to feel good about the time that I have spent on Earth, and that I've done more than just, okay, make a few dollars trading some futures contracts, which at the end of the day is pretty empty, But at least I can maybe pass on my knowledge.
I mean, I think it's okay I think there's a difference between like greed and having financial abundance so that, we get compensated for doing some coaching and this and that. When I coined a phrase, or at least I think I did, called intellectual greed. And I remember I can see it from where I'm sitting. Um, I have a hardcover and a softcover version of the first Market Wizards. And again, outside my dad, I don't think, I have to say Jack Schwager's had such a profound effect on my life by introducing these people. Because, in '89, when the first book came out that Bruce and Michael were in, and Ed Sakota, Paul Tudor Jones, and I think Richard Dennis is there, Saliba, I ended up getting to know a lot of those guys. And just knowing that it was possible, right? That because everything else was a black swan, I didn't know that it was possible that you could trade the markets. I had seen George Soros. I had heard about the market crash. And in those days, you'll remember, Shearson Lehman Brothers did a good job of saying, Elaine Garzarelli had called the crash. And I was like, wow, what a genius. How? And then you find out, like, down the line, every market wizard was either short futures, long puts. It wasn't like a big secret. So you feel like an idiot. But I think I interviewed Jack about 15 years ago for one of his, I've had him on the show a few times, and I told him, like, without Jack Schwager, there's no Michael Martin. I think I said that very early on before I shaved my head. And because reading those books, I really identified personally with them. And then I went up, I got to know Ed's number. Like, when you think about manifesting abundance, I cold called Ed Sakota. His number was in the white pages.
Right.
And so you think about God or whoever you believe in kind of setting you up to win. I joined the trading tribe for 2.5 years. I get to meet Michael Marcus years before. Like I've said, we've had parallel lives in so many ways. I cold called Helmut in Princeton. I was a new CTA. I had 8 or 9 million in assets. It was mid to late 90s, just before I moved to Los Angeles. And I was scared shitless. Why? Well, because I was now living my dream, and I was afraid it was going to go away because heretofore, I knew how to be a day player. I'd caddy golf bags, I'd wait tables. I was exchanging my time for money, and I was burnt out. So I called Waymar. I went out and had lunch with him and Erwin Rosenblum in Princeton. And it wasn't, I should have asked him for money. I feel like a jerk for not doing it. I think it was kind of like a girl, saying, hey, you should ask me out. But
Right.
my whole thing was like, Helmut, here's what I'm doing. Here's how I'm trading. He was already rich. I never feared anyone stealing my stuff. I said, where are my blind spots? Because if I get put out of business, I don't want to go back to waiting tables. Like, that was a real thought for me. If I blow up, I'm going to go back to caddying golf bags and waiting tables.
Right.
And I didn't do that. So I wouldn't have known all those guys. What do you think about Commodities Corporation when you look back and think about that storied firm from like the early 70s? What are some of the takeaways of the things that come to mind for you if we say, Commodities Corporation?
I mean, I think of Helmut.
Yeah.
Helmut's a guy who I met. He had already sold Commodities Corporation
Right.
to Goldman. He still had his office in Princeton, and that's where I met him at first. But I just think of him because he's an incredible guy, quite frankly. Didn't need to get involved with me by any means. I met him in a freak accident, quite frankly. I was getting divorced, and I was sitting with a divorce lawyer. And the guy asked me what I did. I said, I'm a trader. He said, do you know Helmut Weimar? I lived in the Princeton area. Do you know Helmut Weimar? I said, I know of him. He said, oh, my wife's best friends with his wife. And I was like, okay. If you want to be my divorce lawyer, your wife's going to get on the phone with his wife right now and get me a freaking meeting because I want to meet him. And 2 days later, I met him. And it changed my life a lot. So when I think of Commodities Corporation, I think of Helmet. He's the one that started it. It was all his brain trust. There was no such thing at the time, you know. Um, and getting to know the man who was able to do that. And Helmet's not, I wouldn't say a lot like me. He's a lot more refined, that's for sure. He's probably a lot more intelligent, I would say, that's for sure.
Yeah.
But the way that he did things and the way that he treated people and the respect that he gave everybody, right? Really had an impression on me, and the help that he offered to people like me or you when he didn't need to. He was already old by the time it was the 90s. He was already rich. You know, he didn't need to do any of that. And yet he did, you know. That had a big impression on me. So that's always what I think of when I think of Commodities Corporation.
Yeah, I echo those sentiments 1,000%. I remember I was, for whatever reason, living in Yorkville at the time. I remember going to Penn Station, getting on a train, heading out to New Jersey, and feeling a little intimidated because I didn't know anyone else. I had read the book and I'd read about a lot of the traders there, especially, Ed or Michael and Bruce. But again, I was going there for more mentorship to say, like, I have this company. I think I can do this. Where do you see blind spots? Because I'm afraid I don't want to blow up. I'm not going to do anything stupid. I don't trade on emotion. But where do you see a blind spot? Because you come to that fork in the road, right? And as Yogi Berra said, you come to a fork in the road, you take it.
Right.
And you've mentioned in the books, I think you got two allocations from Weimar at two different times. There was early on, and then after you kind of went back, if I remember. My whole thing was like, if I'm a CTA, there's only so much capacity I can have trading the money myself. So am I going to grow by gathering assets, or am I going to grow, like you were mentioning before, by hiring people and having infrastructure and all that kind of stuff? So I was kind of looking for that kind of insight because I had no one else in my life who was doing that. And he was so generous. And that was when I kind of turned and said, if God, I promise you, if I have any sense of success, however a person can define that, I'm going to just give back to the community unconditionally, because in the mid to late 80s, I couldn't get anyone to Fagamira. I couldn't get anyone to help me. There was nobody. So, 10 years later or so, well, not quite 10 years, but 6, 7 years later, I'm meeting Weimar, and I'm like, my God, I think that firm was 50 years ahead of its time. I really don't know of any company that comes close to having done what they have done to put that, maybe Renaissance, right? But they're more computers, right? When I think of discretionary trading and prop trading firms, I don't think there's been a firm since Commodities Corporation who have come close to replicating. What do you think?
I don't think so. I don't really think so. No. It was a unique situation. Started and managed by a unique man. Don't forget, when they started, like in the first, I don't know the exact numbers, but in the first 6 months, they lost like 35 or 40% of their capital.
Yeah.
They were dead, right? And they turned that around too. So
Such a remarkable, story for that period of time. Obviously, too, with the inflationary markets of the 70s, that certainly didn't hurt, being that they were largely commodities. That he could raise, think about the money, right? That he could raise, really have two clients for $1 million each. One was Nabisco. The other one was Paul Samuelson. Like, to raise $1 million for something that no one really ever heard of.
right.
He was beyond his years. Like, even though he was older, like, he was way ahead of his time. I don't really know. And then to attract that type of talent, like, my goodness, even like you said, Paul, who didn't really work there, but he got an allocation. Like, I think Louis Bacon, maybe his brother Zach, like, they all kind of were in and around that group of people. What a time! Like, what a very fertile time to to be in that space and to share ideas and to have imagine sitting with Bruce and Michael at the desk, right? And just being able to pick their brains from position sizing to, because those guys swung big. I mean, they They
You
weren't
do.
paid to diversify. They were paid to kind of say, here's my best idea. I'm putting all my money in
Right.
one idea. Like,
Yeah.
so Jason, we're coming up on 50 minutes. I certainly appreciate what you do. I appreciate you giving back to the community. You're one of the good guys. Everyone should follow you. The links to Jason's stuff are in the description here. I'm glad we have a chance to, chat and catch up, and we can continue you know, our relationship, our friendship. I'm grateful for you and what you do. And please come back again on the show and talk about your successes.
Anytime. We can talk about my failures too. We'll probably learn more from those than my
Yeah.
success. But yeah.
Thank you, my man.